Hello traders, today's video is about the strategy that combines two indicators, the Bollinger Bands and Stochastic. Bollinger Bands will play the key role here as this strategy focuses on trading in channel between the bands. This is a scalping strategy, so it should be interesting. Of course, the settings of the indicators are as well crucial, so they are as follows. Moving average period in Bollinger Bands is 20 candles and the standard deviation multiplier is 2. Now let's add the stochastic and set the parameters with 5, 3 and 3. Okay, now the conditions that has to be made for a buy trade. Candle crosses or at least it touches the bottom line of Bollinger Bands and the percentage K line crosses the percentage D line bottom up below 20%. We can enter the market on the opening of the next candle after the signaling one. Okay, so now as you probably will guess, the conditions for a sell trade there are in opposite direction. A bar crosses or at least touches the upper boundary of the Bollinger Bands and the percentage K line crosses the percentage D line upside down above 80%. And entering the market, of course, occurs at the opening of the candle that follows the signaling one. So guys, now let's check some examples on the charts. Okay guys, now we are in the client's cabinet. Let's choose some asset. For example, Euro USD currency pair. The chart is opening and right now I already added the Bollinger Bands and the Stochastic Oscillator to the chart, but let's do it again together. So go to the indicators tab, click on that, the whole list appears. Click Bollinger Bands and down below you have the Stochastic Oscillator. Close the list and let's set the parameters. Click on Gear tab and here the Bollinger Bands are already correctly by default with the correct numbers. The Stochastic Oscillator, we need to set the percentage K line with 5. As we mentioned before, percentage D is 3 and smoothing period is 3 by default. Okay, so now the entering into the market. As I spoke before, two things must occur. The candle needs to touch or cross the upper or the lower boundary of the Bollinger Bands, and the Stochastic Oscillator needs to, on the Stochastic Oscillator, the percentage K line needs to cross percentage D line if this is a buy trade from bottom to the upside, and if it is a sell trade from top to the bottom, above 80%. Okay, so now let's find some trades, find some examples that could occur with this strategy. Okay, here we have the first example. I already zoom it in for you. And right here you have this red candle crosses the upper Bollinger Bands, and in the stochastic we see that percentage K line crosses percentage D line from the top to the bottom above 80% line. So that would be our signaling candle, this one. And the next one is our entry candle. So the opening of this candle is our entry point. So let's measure it, guys, how much we could take from this trade. The entry point and the level where we close the trade, it would be when the candle touches or crosses the lower band of the Bollinger Bands, which is here, this red candle, right? So it would be, for example, right here, and this trade would give us 28 pips around profit. Our stop loss would be above the high of this candle that crossed the Bollinger Band. I always recommend somewhere around 5 pips from the high of this candle. The high of this candle is around, it's 1871, so it would be 1876, 77 ish stop loss level, right? So that is the example of a sell trade. Okay, and here we have beautiful textbook example of a buy trade. Right here we have this green candle that crossed, I will zoom it in more, that crossed the lower Bollinger Bands, and as you can see right here the percentage K line crossed the percentage D line, bottom up below 20%. And once again as follows, let's measure how much pips it would give us. So the opening would be on the opening of the following candle after the signaling one, so it would be right here, and the closing on the upper boundary, so it would be around 30 pips. Again, let's set the stop loss of course for this one. So 5 pips below the low of the candle, below the shadow of the candle that signaled the entry. It is a 1301, so it would be 1296. Somewhere over here. Okay guys, so once again, let's remember the conditions. Entry point, candle needs to touch or cross the lower or upper boundary of the Bollinger Bands, percentage K line crosses percentage D line, above or below, above 80% or below 20% in the stochastic oscillator. And the entry point is the following candle, which is the next one after the signaling one. Stop loss around 5 pips below the low of this signaling candle. So guys, one more thing. Before you try it with the real money, practice on demo account, and then if you feel enough comfortable, then try how it goes with the real money. So that's it for today from my side. Thank you again, and see you, hear you in the next one. Take care guys, bye.